Hello, it's Jeffrey Christian of CPM Group. It's 12:45 in the afternoon on Tuesday, the 31st of October here in New York. I want to talk about our market outlook, what we see affecting precious metals, gold, silver, platinum, palladium, and our price expectations for the next few weeks or the next few months. But I'm going to do that later in this. And first, I want to go through some questions that were asked of us after our video questions and answers last Friday. I probably should try to discourage this and expectations that we will respond to questions because we'd rather sort of focus on what we think is important. But let me do a few here. First one, what's your allocation, platinum versus gold versus silver? And, we look at platinum, we have a modestly positive outlook for it over the next several years, but it's an industrial metal. Right now, we're looking at a world that has economic constraints and issues, and we're looking at an auto industry that has constraints and issues as well. And we see gold and silver as being much more prominent. Now, obviously, how much metal you own and what your allocations are depends on who you are, your level of wealth, your level of sophistication in investing, the time horizon of your investments, your risk tolerance, and more. We would put most of our attention and allocation right now on gold as a financial asset and an alternative asset, hedge against currency volatility, economic volatility, political instability, and a variety of other factors. We would also put some into silver because silver will react like gold as a financial asset to those factors, and we would probably downplay platinum right now. But again, it really depends on who you are and what your portfolio is. Do we have any idea how much silver is needed in modern weapons? Yes, and yes, some of that's off limits in terms of what we can say. On a total military use basis worldwide, it's probably less than 50 million ounces a year right now. And a lot of that is metal that gets recycled from electronic equipment within a military system or batteries that are being taken out of missiles and torpedoes and being replaced with fresh batteries, and then the silver is recovered. And about half of that probably comes from the United States military. We are not really at liberty to talk about how much metal is used in each missile or each torpedo battery, per ordnance there. I will give a little bit of a thing. Silver was removed by the U.S. military from its list of strategic metals probably in the 60s, maybe even in the 50s. It was very important in World War II because of reconnaissance photography and some electronic applications. But by the 1960s, the U.S. military said, hey, we really don't need this metal. They had about 137 million ounces in the strategic stockpile that they had gathered really over the 60s. And by the end of the 60s, they said, we really don't need this. There's a lot of silver around. Silver's available around the world. It's not a strategic metal as the U.S. military defines it, so we'd like to sell that metal. And they had trouble getting congressional approval to sell it because the military, with their strategic stockpile of various goods, they live under a rule that they cannot disrupt the market. So there were always these complaints that if you try to sell the 136 million ounces of silver that you have, you'll depress the silver price and damage domestic silver producers and things like that. In the 1980s, the U.S. Mint created the Gold Eagle, and we were actually working with them on the Gold Eagle creation, and then we also pivoted over to the Silver Eagle, and we were talking with Senator McClure from Idaho, various Congress people from Idaho, and industry associations and organizations and miners to help the U.S. Mint create a Silver Eagle. And one of the things that we did was we said, in the initial years, you can draw off the strategic stockpile. The U.S. Silver Eagles are minted to meet demand for Silver Eagles from investors, so you won't be selling undue volumes into the bullion market and depressing the price. And I actually helped write Senator McClure's presentation in introducing the legislation for the Silver Eagle, in which I talked about how you would be transferring the ownership of the strategic stockpile from the U.S. military, the Defense Logistics Agency, to individual citizens. And you would have a silver stockpile walking around the country in citizens' pockets. And because back in the 80s when I wrote this, there was greater civic responsibility and pride in the United States, I made the argument that in a national emergency, if the military needed the silver, U.S. citizens would sell back those Silver Eagles. So the idea was that we went there. But that just sort of was indicative of the fact that over the course of the 70s, really after the post-Vietnam era, the U.S. military decided that silver wasn't such a strategic metal that they had to have their own strategic stockpile. The next one, question, if there's no manipulation, why did J.P. Morgan get fined $920 billion? And actually, it was, I think, probably $920 million, but that's beside the point. It's an excellent question. It's a perfect setup. J.P. Morgan was fined for a lack of supervision. Its senior managers were not paying enough attention to what its traders were doing, and that allowed those who were charged with spoofing to do what they did. And what they did was spoofing, which is short-term manipulation, pushing prices higher and lower for a matter of minutes. It wasn't long-term manipulation of the price. It wasn't a concerted effort. In fact, in the trials, they found that the 2 or 3 people who were found guilty of actually spoofing the silver market didn't even coordinate with each other. So there were RICO charges, saying that this was racketeering and a conspiracy within J.P. Morgan's precious metals desk. And what they found was, no, these guys knew that each other would do this, but they didn't coordinate. So the RICO charges, they were acquitted on. It was a lack of supervision that J.P. Morgan was fined for. And they went through this large process of having federal supervisors monitor their supervision and their oversight and operations for several years to assure that J.P. Morgan had put in place adequate supervisory oversight. It's the same fine, this lack of supervision, that the same fine that Drexel was paid in the 1980s, 1989, I think, was the year they paid their fine for not supervising Ted Butler when he was a broker in their South Florida offices. He tried to manipulate the frozen and concentrated orange juice market, which is very small and thin, pooling and using his clients' funds without their permission or authorization. And the CFTC caught on because the orange juice price was not behaving the way they thought it should. So they investigated. They found that he was doing this. They went to Drexel. They said, hey, you've got this broker who's doing this. Drexel paid a fine for lack of supervision. And the rest is all history. But that's what J.P. Morgan was fined for, not supervising and providing adequate oversight of its traders, 3 or 4 traders, however it was, that were found guilty on spoofing. So is there manipulation in the market? All kinds of people manipulate all kinds of markets. But what J.P. Morgan was fined for was not supervising and paying attention to what its people were doing on short-term manipulation, pushing prices higher and lower for a matter of minutes to take out little pieces of profit. That's a far cry from any kind of conspiracy to manipulate or suppress the silver price. And that's what you need to understand. guys who used to talk about conspiracies, guys who talk about conspiracies, people who insist that the price is being suppressed by some massive thing and have been making those unfounded claims for 40 years now. And by the way, there's no evidence that they've succeeded. The price has gone from $5 to $3.50 to $50 to $15 to $50 to $35. Yeah. The guys who talk about big conspiracies and manipulation and say, well, look, JP Morgan was fined all this money for manipulating the market. No, JP Morgan was fined for not supervising people who were spoofing short-term moves in the trades. Big difference. If you don't understand that big difference, you really need to go back to school. Gold in the fourth quarter. I won't read the whole thing, but basically somebody said, hey, do you still think that the price is going to fall in the fourth quarter, that there's going to be a downward correction before it all? And obviously the Israeli-Hamas war has changed everything. Our view, and I'll go in it a little bit more in detail, is that there could be some price reduction in the next couple weeks. Gold does look a little overbought at this point, as does silver, but that we think that the seasonal weakness that we expected to see a low in September, October, early November is in the market now. And I'll talk a little bit more about that in a second. You're seeing CPI, the PCE, you're seeing lower inflation. PCE came in like 3%. CPI, the headline is down to almost 4%. Core inflation has actually picked up a little bit, but it's under 4%. You're seeing lower inflation. You're seeing interest rates high and looking like they're peaking. Obviously, as I'm speaking, the Federal Reserve Board's Open Market Committee is meeting today and tomorrow. The vast expectation is that they will not raise interest rates this month, 25 basis points, and that may well be true. But you're seeing much stronger economic data, very strong GDP, very strong jobs reports. The auto industry strike is now ending, so you're going to see a pickup in auto production. There's a lot of economic strength. Inflation is still around 4%, so it hasn't been beaten down to where the Fed wants. They want to see the PCE around 2%. So there's a lot of factors that are taking pressure. A lot of the reasons why investors would buy gold and silver are dissipating. The big one that's there, which is new this month, is the Israeli-Hamas war. And that has probably affected the price of gold and silver. 2 weeks ago, CPM Group thought that the gold price, which was about $1,940 at the time, could fall to around $1,900. It didn't. It rose to $2,009 as of this morning. So it rose more than $70 instead of falling. We think it's overbought. We wouldn't be surprised to see it come off. I'll talk a little bit about that in a second. But the one thing I want to talk about in general before I go into each metal is this. Oil prices were $82 before Hamas attacked Israel. They shot up to about $92. They're back down to $82. The oil market, which has a lot of people in the Middle East for whom this is very close and central and important, doesn't seem concerned about the Israeli-Hamas war broadening into a more bigger regional conflict that would upset oil supplies. Politicians in the United States and other places are saying, yeah, we're worried about that. But the oil price suggests that the oil market is not particularly worried about that. So what do we expect? Gold prices around $2,009. We wouldn't be surprised if they come off a little bit. They do look a little bit overbought, but there are a lot of problems out there in the world, including the Israeli-Hamas war. If they did come off, we think that 1980, not 1900 is the low, not 1880. We think that that third quarter, fourth quarter correction that we have been talking about is in place. It's in there, and we probably won't see a major decline in prices. Going forward, we see a plethora of economic and financial and political issues that have to be dealt with, including the continued dysfunctionality of the Congress and the 2 weeks that they have now for another continuing resolution, which is what it's going to be. That's probably less important than a lot of the other factors. So we still think that the prices probably have made their low and they move higher broadly over the next year or two, depending on how things go politically and economically and in the financial markets. About the Congress, the old joke is that politicians are very good at fixing problems they've created. And that's what these guys do. And this is what you should expect this time around. Again, they'll take it up to the last minute. There'll be all kinds of economic stresses that will be caused over concern if something goes wrong. But at the last moment, they'll probably do the right thing, and it'll be resolved and the can will be kicked down the road. That doesn't mean that the can has been dealt with. It just means it's been kicked down the road. In terms of silver prices, they've risen sharply as well over the last couple days, the last week or so. They do seem a little bit overbought, not as overbought as gold, though. So we wouldn't be surprised to see the price of silver fall maybe down to $22.60 or so. But we don't, again, as with gold, we don't see the prices falling back to $22 or below $22 the way they were just like a month ago. Palladium, different story. The auto strike has clearly limited physical demand. Investors have also kind of pulled back. The auto strike is now behind us. So that you should see some increase in physical flows of metal back into the auto catalyst manufacturing business. Palladium has risen. We think it has a little bit more upward momentum that it could go to. We're looking at $960 or so over the next couple of weeks. A spike to $1,000 can't be ruled out. I'm not sure that price can be sustained at $1,000 at this point, but we do see some upward potential in silver, or in platinum. Palladium hasn't risen out of the range that we thought it would be in. We think it stays below $1,200 over the next few weeks. We're not quite sure if it falls further. We don't think that it necessarily breaks out of its downward cycle because of a lot of fundamentals in the industry. I think that's all I've got for you. You can always go to our website, buy our yearbooks, buy other research, read some free research that we have there. And you can always contact us at info@cpmgroup.com to talk to us about other ways that we can help you manage your precious metals and commodities financial exposure. Take care, be good to yourself and those around you, and try to do something good for the world over the next few weeks. We'll talk to you next toward the end of the week.